All right, so welcome to the deep dive. Today, we're diving into something that's probably on everyone's mind right now and has everyone a little freaked out, probably. The U.S. market took a pretty serious nosedive on March 10th, 2025. And yeah, if you took a look at your investments that day and saw like a whole lot of red, well, you're definitely not alone. So we're going to break down exactly what happened. We've got this report here. U.S. market summary, March 10th, 2025, financial decline analysis. And let me tell you, it's pretty intense.
Yeah, I mean, it's worth pointing out right away that this wasn't just, one of those like little dips that the market does sometimes. Like we're talking some serious losses here.
Yeah.
The Dow Jones, it went down by 2.1%, which if you do the math, that's almost 900 points gone, just like that. And then the S&P 500, that one dropped by 2.7%. And then, of course, there's the NASDAQ, which everyone knows has a lot of tech companies in it. Well, it took a really hard hit, like a 4% drop.
Oof. Yeah, that's rough. So like, is this worse than like a normal, correction? Is that what they call it?
Yeah. I mean, what really makes this situation stand out, what makes people nervous, is that all these major indexes, they all tanked at the same time. And that usually means investors are like really spooked, about something big. It's not just one part of the economy that's hurting. It's like a system-wide thing. And that, of course, impacts, everyone, businesses, people just trying to live their lives. And then it ripples out and affects the whole world, really.
Right. Okay, so let's get into the nitty-gritty here. The report, it mentions that there's this whole tariff thing going on again. It's like, remember those tariffs that the U.S. put on, like Canada, Mexico, and China? Well, they're back. And the White House is even talking about adding even more tariffs, this time on cars and semiconductors. I gotta say, and I'm no expert, but that doesn't sound like the best idea, does it?
Yeah, you've hit on a really important point there. I mean, it might seem like tariffs are a good way to protect industries here in the U.S.
Yeah.
But the thing is, they often backfire. Like businesses, they start freaking out because they don't know what's going to happen. Investors get nervous. And then other countries, well, they usually fight back with their own tariffs. And that can disrupt those really complicated, what do they call them, supply chains. So it ends up hurting pretty much everyone. And we're already seeing that happening. China, they hit back with tariffs on stuff that the U.S. grows, like agricultural products and stuff.
So is that what they call protectionism? And like, how does all this like affect regular people like, me?
Yeah, that's exactly what it is. It's protectionism. And for consumers, it basically means stuff gets more expensive, like way more expensive. Think about it. If you slap tariffs on imports, well, the price of all those imported goods goes up. So suddenly everything from your new phone to your car to even like basic groceries costs more. And when that happens, people start cutting back on spending. And the report, it really highlights how much the U.S. economy relies on people, going out and buying stuff.
Yeah.
If everybody just stops shopping, well, businesses start hurting. People lose their jobs, and the whole economy slows down even more. It's a vicious cycle.
Yeah, for sure. And the report also mentioned that people aren't feeling so great about the economy right now and that, they're not buying as much stuff. Retail sales, I think it said, went down by like 1.5%. So is this a sign that we're heading for a recession? Like, is that the R word everyone's afraid to say?
Yeah. Well, I wouldn't say it's a sure thing, but it's definitely something people are worried about. Like J.P. Morgan and Goldman Sachs, which are pretty big names in finance, they both think there's about a 35% chance we'll have a recession sometime in the next year. And to make things even more nerve-wracking, President Trump, he recently said that he wouldn't rule out a recession happening. So that obviously didn't calm anyone down. And you can really see this fear in the markets. Like, look at what's happening with the 10-year Treasury bond. That's kind of like a measure of how confident investors are feeling. And right now, the yield, it's fallen below 3.5%.
Okay, I gotta be honest, like bond yields and all that, it's kind of over my head. Can you break that down for me? Like, I'm 5.
Oh, yeah, sure. Basically, a bond yield is like how much money you get back when you invest in a bond. So when investors are worried about, the economy tanking, they tend to put their money in what they consider safe investments, like U.S. Treasury bonds. So like everyone rushes to buy these bonds, which makes the price of the bond go up, but then that causes the yield to go down. So when you see bond yields falling, it usually means investors are getting scared and trying to protect their money.
Gotcha. That makes sense. So we've got these tariffs, everyone's nervous, and there's talk of a recession. Like, is there anything else contributing to all this mess? What about the tech sector? It seems like even the big guys, like, Tesla and Apple, they're taking a hit too.
You're right. Even those tech giants, they're not invincible. Everyone thought tech would just keep going up forever. But there are a lot of things making investors nervous about tech right now, like There's talk about maybe some new regulations on AI, and then there's the whole chip shortage that's been going on. And plus, investors are just generally moving away from riskier investments. So even companies like Tesla, which is down 6%, and Apple down 5%, they're not immune. It seems like even if a company is seen as super innovative and future-proof, they can still get caught up in this whole economic mess.
Wow, so it's not just the US, right? The report said that this whole thing is impacting markets all over the world.
Yeah, absolutely. Yeah. The world's economy is super connected. So when something big happens in the US, it's going to cause ripples everywhere. We're seeing markets in Europe and Asia drop too, and investors are worried about a global slowdown. And you know who gets hit the hardest in situations like this? It's the emerging markets. Their currencies, they tend to lose value compared to the US dollar, which is seen as a safe bet when everything else is going crazy.
Oh man, so we've got trade wars, consumers freaking out, a possible recession on the horizon, and tech isn't looking so hot anymore. Is there any good news in this report, or is it just all doom and gloom?
Well, it's not all bad news, honestly. The report does highlight a few potential bright spots, some things that could make the situation less terrible, I guess you could say. And we're going to get into all that in the next part of our deep dive.
Okay, that's good to hear. I think we could all use a little bit of hope right now. We'll be back soon to finish dissecting this whole market crash thing, and hopefully we'll come out of it with a better understanding of how to, navigate this whole crazy situation.
Welcome back to our deep dive into this whole market meltdown thing.
So we covered some pretty heavy stuff in the first part, like all the reasons why the market's tanking right now. You mentioned there might be a few glimmers of hope, anything that could make this whole situation less awful. Can you give us some details on that?
Yeah, for sure. It's important to keep in mind that markets, they're cyclical, what goes up must come down and all that. The key is to understand what's really driving things and then see if you can spot any areas where things might actually be, kind of okay.
Okay, so what are some of those okay areas?
Well, one thing that analysts are looking at is the S&P 500 and whether it can stay above a certain level. It's 5,500. The folks over at Morgan Stanley, they think that's a really critical support zone. Basically, if the index can hold above that level, it might mean that, people are starting to chill out a bit and the market could, stabilize.
So it's like a line in the sand, right? And if it holds, maybe investors will start feeling a little more confident.
Exactly. And there's also the Federal Reserve meeting coming up. Everyone's got their fingers crossed that the Fed will do something to, calm things down, give everyone a little bit of reassurance.
Right, the Fed. So can you remind me again, how do their decisions actually affect the market?
Sure. So the Fed, they're like the big boss of money in the U.S. They can change interest rates, which affects how much it costs for people and businesses to borrow money. If they lower interest rates, it can boost the economy because borrowing money is cheaper. But if they raise rates, it can help control inflation, but also slow things down a bit.
Yeah.
The Fed also has some other tricks up its sleeve, they can put more money into the financial system, which can help stabilize things when everything's feeling shaky.
So everyone's basically waiting with bated breath to see what the Fed's going to do next. Hopefully something good, right? Okay, what about tech? Any chance that sector is going to bounce back?
Well, there's always a chance, right? I mean, if some of the big companies like NVDA and Meta, if they announce good earnings in the next few weeks, it could be a sign that the tech sector is not as doomed as some people think. That could definitely give investors a reason to be optimistic and maybe kickstart a recovery.
Fingers crossed, right. Okay, so maybe tech will make a comeback. But even if that happens, there's still this whole recession thing looming over everything. We talked about how people are worried and not spending as much. What else should we be watching out for, in terms of the recession risk?
One thing that's a little concerning is all the student loan debt out there. The report actually compares the current situation to what happened with subprime mortgages back in the 2000s, right before the whole Great Recession thing. And there's some similarities, student loan debt's gotten huge, over $2 trillion. And more people are having trouble making their payments.
Wait, so you're saying student loan debt could be the next big financial bubble to burst, kind of like what happened with the housing market?
It's not impossible, no. If enough people default on their student loans, it could have a domino effect on the whole financial system, kind of like what we saw with those subprime mortgages. The scary thing is, with student loans, there isn't really a good safety net for borrowers, like there was with the housing crisis.
That's a pretty scary thought. A whole generation saddled with debt and no one to help them if things go south. So how does this all affect the job market? What's going to happen there?
That's a big question mark, too. If companies are struggling and worried about the economy, they're probably not going to be hiring a lot of new people or expanding their businesses. The report suggests that certain sectors, like manufacturing and retail, they could see a lot of job losses. Those industries are always hit pretty hard when the economy takes a downturn.
So, like, what can we do to protect ourselves? Should I be, like, hiding cash under my mattress or buying gold bars?
Uh-huh. Well, those are options, I guess. But there are probably some better, more practical things you can do. Like, first things first, take a look at your finances and make a plan. That means having some money set aside for emergencies and figuring out a budget so you know where your money's going.
So, like, basic personal finance stuff. Got it. Anything else?
It's also a good idea to think about ways to have more than one source of income. If your entire paycheck comes from one place, you're way more vulnerable if something happens, like you lose your job or the economy tanks. So maybe look into some freelance work, start a little side hustle, or learn some new skills that you could get paid for.
Don't put all your eggs in one basket, right? I mean, this whole situation is making me think about the big picture. Like, what does this market crash really tell us about the U.S. economy? Is this just a temporary hiccup, or is it a sign that there are some deeper, more serious problems?
That's a tough question. There are a lot of things going on. But it does feel like this market crash is kind of a symptom of some bigger trends, like,
Yeah.
all the geopolitical stuff happening in the world, these trade wars, and of course, climate change. It's like a wake-up call that maybe the way we've been doing things, it's just not working anymore.
So we're not just talking about a market crash. We're talking about a whole bunch of interconnected global problems all happening at once.
Exactly. And to deal with that, we need to change our thinking. We can't just keep looking for quick fixes. We need to start thinking about long-term solutions that are more, sustainable.
It sounds like we need to rethink what's important, both individually and as a society. Like, what are our priorities?
Yeah, that's a really important point. This market crash, as bad as it is, could actually be a good thing in a way. It's a chance for us to step back and figure out what really matters. And maybe, just maybe, it can help us build a future that's more resilient, more fair, and more sustainable.
Okay, that's actually a pretty inspiring way to look at things. I mean, this whole market crash is definitely scary, but maybe it can also be a chance for us to create some positive change. But before we get too deep into solutions and all that, I think we need to talk about how this is affecting people, like on a personal level. We'll explore that in the last part of our deep dive. Okay, so we've spent a lot of time in this deep dive, like really digging into the reasons behind this market crash and, what could happen because of it. We've talked about all this stuff like tariffs, bond yields, what the Federal Reserve might do, and even that whole student loan debt thing, which is pretty scary. But it's easy to get lost in all the numbers and like the technical stuff. We forget that there are actual people who are being affected by all this.
Yeah, you're absolutely right. It's easy to get caught up in the data and the financial jargon.
Yeah.
But we have to remember that behind all those numbers, there are real people, real families, whose lives are being turned upside down by this whole thing.
Exactly. Like, this isn't just some abstract economic event happening somewhere out there. It's about people losing their jobs, having trouble paying their rent or their mortgage, not knowing what's going to happen next. The report we've been talking about, it doesn't really focus much on the human side of things. But I think that's actually the most important part of the whole story.
I couldn't agree more. Every single one of those statistics, it represents a human story.
Yeah.
Think about it like the small business owner who put everything they had into their company, and now it's falling apart because of the economy. Or the family that has to make really tough decisions about, where to live, what kind of health care they can afford, can their kids go to college. And then there are all those young people graduating, ready to start their careers, but there are no jobs. All those hopes and dreams, they just get crushed.
It's really sad to think about all that. It's not just Wall Street that's hurting. This is affecting regular people everywhere. So, like, what kind of impact is this going to have on people psychologically, socially? What can we expect to see happening?
Well, we can look at what happened during past recessions to get an idea. We know that when people are struggling financially, it affects their mental and emotional health. There's more stress, more anxiety, more depression, and unfortunately, we also see an increase in things like substance abuse, domestic violence, even crime.
It's like this wave of negativity that just sweeps over everything. It affects individuals, families, whole communities. So what can we do about it? How can we support each other and like stay strong when everything feels so uncertain?
There are things we can do, both as individuals and as a society. On a personal level, it's important to take care of ourselves, both physically and mentally. Make sure you're connecting with people, finding healthy ways to manage stress, and don't be afraid to reach out for professional help if you need it. It's also crucial to be smart about your money. Have that emergency fund, make a budget, and try to have more than one way to earn money just in case.
So basically, take control where you can and build a support system to help you through the tough times. Okay, what about as a society? What can we do to help each other through this?
Well, we need to push for policies that protect the people who are most vulnerable, you know. That means making sure there's a strong social safety net, making healthcare and housing more affordable, and investing in things like education and job training.
Yeah.
And it's also about remembering that we're all in this together.
Yeah.
We have to support each other and build a sense of community.
It's like this market crash has shown us where the cracks are in our system,
Well,
right? But it's also a chance to rethink things, to rebuild and make things better, more fair for everyone.
I think that's the big lesson here. Yeah,
Yeah.
we're facing some huge challenges and it's scary, but we have the power to change things. If we stay informed, have these important conversations, and work together to make things better, we can get through this.
That's a really hopeful way to look at things. This market crash is a wake-up call for sure. It's a reminder that we're all connected and that our choices matter. But it's also a chance for us to build a better future, not just for ourselves, but for, our kids and grandkids. So thanks for joining us for this deep dive. Stay informed, stay involved, and don't lose hope. We'll see you next time.